Well, at the back of that story now, I want to take you to the story that we had talked about earlier, the fact that for most Kenyans, home ownership still remains out of reach. And, well, there are various innovations that are coming into the market, not just from the government itself, but from other stakeholders, with various initiatives that now enable people be able to become home owners. Well, today, homeowners will be able to acquire property at residential suburbs around Nairobi without the need for conventional bank loans. Why is this? Well, because Genghis Capital, an investment bank and Paradigm Project's real estate development advisor, have unveiled an affordable home ownership solution that is dubbed Home. Now, to talk to us about this, two gentlemen in the studio. This, of course, is Geoffrey Gangla, who is the CEO at Genghis Capital, and Johnson Mwangi, who is a director at Paradigm Projects. Karibuni sana.
Asante sana.
Off the top of my head, the fact that, according to the most recent statistics, a huge gap in the home ownership market, especially in the middle to the lower levels. Innovation, of course, coming in to play a huge role in this. Do you think you will be able to make a difference in this need today? We start off with you, Johnson.
Yes, definitely. Looking at even how we came up with the home solution.
Yes.
We're creating an ecosystem between the developer, the buyers of property, and the investors who finance real estate. Mm-hmm. And for us, we look at this from a point of view of how do we make Kenyans afford homes? Affordability is a big question. I think we all admit that we think we are able to afford, but when it comes to actually putting in down the money, that becomes a problem. So for us, we have analyzed this from a point of view of if we're able to harmonize the developer together with the buyer and together with the investor into one platform,
yes,
we can therefore reduce or limit the distance between affordability and home ownership. And I think if we do that, we'll be able to enable more Kenyans to own homes.
Mm-hmm. Well, Geoffrey, the conversation around home ownership most of the time revolves around the question of financing and the apparent and indeed real mismatch in the market, especially in Kenya currently, between you need long-term financing for your house.
Yes.
All the products out there, short-term funds, banks yes, will give you maybe up to 5 years to repay the loan. Home ownership typically is a 30, 20-year conversation.
Indeed.
So how do you then start to mend this mismatch so that you can say that what we are putting on the table here is relevant? Or how does then this product iron out that conversation and say we don't need to have this conversation?
But I should start by saying, unfortunately, I'm not Geoffrey. Geoffrey, yes, our CEO, couldn't make it. But Masood, I'm also part of Genghis Capital, yes, and the real estate side. Now, you put it quite rightly that there's an inherent mismatch between what the developer wants and what the buyer wants. And banks usually perform that intermediary role of converting short-term capital to long-term capital. But as we've currently seen in our environment where the banks have been capped their lending, they can't price for risk anymore. So what we've come up with is a solution where another intermediary can come in and perform that role of a bank. And we've seen a lot of the times, like NSSF has done a tenant purchase scheme, NHC has done it. Yes. There are other private developers who are doing it, but there's no structure in it. Genghis Capital is coming in, offering a structure towards these developers who would like to do this. Yes.
So then how do you then knit the financing conversation? Is there still a bank in the background, some sort of long-term financier, maybe an insurance company, someone who has long-term funds sitting in their vault somewhere, who then needs to start to make this relevant in the market?
Yes, it needs a cash flow buyer, a long-term cash flow, and most of the time it will likely be insurance or pension schemes who need that long-term cash flow just to match their long-term liabilities. No, there's no involvement with a bank. We've just the developers have been doing it with mortgage-backed securities. Yes. We're just trying to push ourselves there slowly, but now through the private market before the government can come in and assist us in actually getting ready for a mortgage-backed security system. Yes.
Let's come back to you, Johnson, and the fact that there has been this huge concentration on the upper end of the market in the past, leaving the middle and lower segments of the market relatively untended. Yep. Do you think this product then starts to have a conversation about these other segments?
Yes. Just to give you a precept as to how it works. The first thing that we're doing is we are looking for property out of town. So typically we're looking at a diameter of about 20 kilometers from the CBD. That way we can get land at an affordable price.
Yes.
Number two, Our model is based on apartment development.
Yes.
Typically because if you try to put up, if you try to put up single dwelling houses, you are unable to make the property affordable. And number 3 is typology. In our model, we are looking at developing studio units, what people call bed-sitters, 1 bedroom, 2 bedroom, and 3 bedroom, which we feel the majority of Kenyans possibly are staying in one of the 4 types of households. And number 4 is now price. Now, when we did the affordability matrix a while back, we have more or less agreed that any house between 1 million and 10 million is affordable. So it's our job to look at the different locations that we pick and see which house can we build here. 1 million shilling house, 3 million shilling house, 8 million shilling house, and 10 million shilling house. And we feel that with that approach, then we cater for the larger percentage of people who currently today are just tenants.
Coming back to you, Masood, infrastructure tends to be a major part of the conversation as well. The fact that a lot of the areas you'll be looking at tend to not be serviced. There are no roads, there's no piped water, sewage systems, that sort of thing, which is typically a government conversation, or the city, county government. How then do you start to have those conversations with that kind of person at your own level? Because they will then ask, do you have a collective who also need these same sorts of services to justify the price?
Now, as Johnson mentioned, we have a radius we're looking for areas which have services, so water, infrastructure, road networks. We don't want to take people too far out of the city such that they spend 2 hours commuting. And the World Bank came up with a requirement that the people need to be about 40 minutes from their workplace. And that, with Nairobi traffic, isn't too far out. And within that area, we'll find the infrastructure with the roads and the services majority of the time. When it's not available, private sector has to put it. Yes, it does.
Okay, the question around what government is doing and then how that sort of starts to factor into your initiative, the fact that we have seen them as late as yesterday talk about 60 projects that they intend to roll out shortly, the fact that they intend to start out with this big bang. How then does that affect private players such as yourselves in terms of if you go in at this price segment and 6-7 months later government comes in with a bang and changes the entire price narrative? How do you factor that in for whatever sort of investment you're looking at?
Okay, I think the government, number one, from what I know, is that they are looking to develop housing, especially for the civil service. Yes. So majority of the projects that they're coming up with now are targeted towards housing their own people. Yes. So there's still a big gap of people who work in private companies, who are business owners, who are able to take up the product. Secondly, I mean, looking at the demand statistics of this country, I don't think we can exhaust housing. I mean, if you're able to look at the population of Nairobi and look at how many people pay rent, I think that the statistics are talking about 4% of the population who own their own home. Yes. So it means there's a big opportunity for very many players without us feeling like there's competition. In fact, for me, the pool is even bigger, for even more players to come in. The government, the private sector, I don't even think we'll be able to finish the demand appetite. Yeah.
So assuming then, Masood, that I'm a young person out there who's relatively young in the job market, this looks like something I'd want to get back into. To get into, where would I start?
Well, as Johnson mentioned, we're looking from studios all the way to 3 bedrooms. Yes. Now, we take it from our parents' generations. If they live in Karen right now, they started probably somewhere in Shauri Moyo and they moved up maybe to South B, then maybe to Westlands, and then finally ended up in Karen. And that's the approach which we'd like to encourage young people who are just starting out to do, is maybe you have aspirations of living in Westlands but can only afford something maybe in another outskirt. Start with that studio. We'll give you a good rate on that studio with a very affordable monthly rent. When you're ready to upgrade, let's say you're getting married and now starting a family, maybe you'll jump to a 2-bedroom and we'd be able to sort of move you from the studio to the 2-bedroom and then from the 2-bedroom to the 3-bedroom. So we're giving them almost a graduation path where they can start from a studio and end up in a 3-bedroom. No need to rent.
Well, home ownership is always a topic of conversation that we like, and the fact of the matter is a lot of people would then be wondering, what sort of cost implication would these be for me? Of course, the fact that we would then be able to graduate this as we go on. So we want to take a short break, but when we come back, I think we'll be coming at you with a question that sort of starts to ask, if I was to get into these right now, how much out of pocket would I be? Would we be talking about 10,000, 5,000 shillings, 15,000 shillings, depending on whatever price point I want to come in? So I'll just ask you to hold that thought. We, of course, want to go to that break right now, but we'll be back in just a couple of minutes to continue the discussion.